Hi there, welcome to Kneppy Invest and welcome to another technical update video. An exciting video I have in store for you today. Well, I hope it's exciting for you. I think it's going to be exciting because even though this particular video will be following the format of other technical update videos, a slight change when we come to the companies I will be looking at in today's video. So these companies were in a way selected by you. And so I scrolled through all your comments over the past few weeks and I came up with 10 companies. I think it's actually a little bit more than 10 companies that I wanted to talk about, particularly when it comes to these companies' charts. So I'm going to have a look at these companies' charts, give a yay or nay, give a reason why I might not like it, or even if I don't like it, why there might be some good things about the chart. Because even though a company share price might be in a well-defined downtrend, there could be some things to like about that particular chart, in particular if it's at a support level. So I do find there's always something to talk about when you look at a chart. So the companies I will be focusing on in today's video include Lotus, Resolute Mining, Ramsay Healthcare, Kogan, Corporate Travel Management, Fletcher Building, DGL, eRoads, VGL, which is Vista Group, I believe. Yeah, Vista Group. Synlait Milk, Woodside, Deterra, and Monash IVF. So that's probably a little bit more than 10. Yes, so maybe I can't count. Anyway, so let's get stuck into today's video, focusing first on the indices. And the thing I'm going to be looking at here is weekly charts. How did these particular indices perform in the past week? Do we have anything to be concerned about, or anything like that? And probably the simple answer to that is no. So this is the XJO or the ASX 200, and the Australian markets were up, or the indices were up, and I'm basing that just off the XJO. Have a look at the XSO, which is a small caps, in a second, and I have a feeling that was up, but the XJO was up. Now, in saying all that, up 0.93%, but if you look at the XJO over the past 4 months, it's gone nowhere. It's just going sideways. But sideways is better than going down. So that's, unless you're short. If you are short, you want it to go down, but I'm assuming most of us are long. I only am long. I more than likely will never, ever short a company. Too risky for me, and I like to be positive about companies instead of being negative. So I'm looking for those companies whose charts look positive, whose outlooks look positive. I use the word looks there a few times. And so I prefer to go long, and probably best reason why I prefer to go long is the upside is infinite, the downside is limited, but short, it's complete opposite. When you go short, the downside is unlimited, infinite, while the upside is not that much. Anywho, so XJO has been going sideways. In fact, the last time when it reached these levels was back in, just going to decrease the size of my video there, or my head. It was back in early March. So what are we, June? Almost the end of June. So almost 4 months ago, we were at these levels, which was all-time high. So we broke through to all-time highs back in, was that not April? What's the month before March? February. Actually, late January, we broke through to all-time highs, and we are struggling. We're remaining above all-time highs, or that support level. So the previous all-time high is the support level, and we are remaining above that. That's actually a good technical sign that we are not falling below the previous all-time high, which was actually reached in, was it August 2021? So overall, nothing to be concerned about when we look at the XGO. And when you expand out and look at the last 15 years, there is a trading range, and at this point in time, the XGO is towards the top of the trading range, but nowhere near the absolute top. So XJO looking good. By no way is it the best looking indice I'm going to show you today, but it's not the worst either. Maybe the worst is the XSO, small caps, small orders. And again, The small caps up 1.7%. So I had a better week than the XJO, but I think the XSO had a worse week last week. And if you have a look at this particular weekly chart for the XSO, not quite as good as the XJO, and the XSO has not been in a trading range over the past 15 years. In fact, it's still well below the heights we saw back in 2007. There we go, 2007, XSO reached a height of nearly 4,200. And so you do not want to be owning small cap companies during the GFC because it dropped by, wow, it dropped by 67%. Yeah, I did not realize that just by looking. It went from 4,200 down to 1,400, which is almost exactly 67%. When I say exactly, almost exactly, technically it's 66.666 repeater percent. Anyway, so not quite as bullish, but I still prefer if I had to invest in companies and I could only choose one type of company, it would be a profitable, growing small cap company. I would definitely choose that over a mature, non-growing company that only provides dividends to the shareholders. But that's just me. I can understand why you might want to own those companies if you're retired and depending on the income. Anyway, I could have gone into a bit of a rant there, but I am going to refrain. And the other thing, probably when you look at these small caps, is the highs we saw recently were back in late March, early April, and we haven't got back to those levels just yet. And the XJO is not that far off those levels. So a little bit more strength in the XJO or the bigger companies on the ASX than the smaller companies. Okay, so let's have a look at the Nasdaq. There was a little bit of weakness in some of the AI companies, the data center, not the data centers, the chip companies. I noticed. So Micron was down. I'm pretty sure Micron reports this week, if I remember correctly. So Micron was down. Then I saw some Facebook posts about people shorting Nvidia, which okay, if you want to do that, that's fine with me. Nvidia, by the way, yeah. So there was a little bit of weakness in Nvidia, and let's have a look at the daily chart. There's no weakness in the. Well, I suppose you could say there was weakness in the weekly chart, but yeah. So there's a bit of selling coming in on Thursday and increased volume on the Friday session, and the share price of Nvidia was down 3.22%. I just think this is a bit of a dip. We have seen these dips in the past. Remember, there was a fair bit of shorting going on with Nvidia back on the 19th of April. Share price of the company dropped 10% on that day, and everyone was thinking the sky was falling, and the share price has rallied. Geez, it's rallied not quite 100%, but it's gone from $76 to $140 in not much time at all. Now this particular video is not about Nvidia, but the Nasdaq is or seemingly quite reliant on what's happening with Nvidia and some of these other like companies. Micron is one. There's quite a few others out there. Anyway, and when you do look at the weekly chart for the Nasdaq, it was flat. Flat for the week, up 0.21%, but this is by far the best looking chart or indice, possibly indice, commodity, and also company we will be looking at in today's video. And if you had all your investments in a Nasdaq ETF over the past year, you have done wonderfully well. In fact, if you had all your money in the Nasdaq ETF over the past 10 years, you've probably done wonderfully well. If they had ETFs back then, not even sure when the NDQ ETF. So there's an NDQ is the indice US 100 index, but there's also an NDQ ETF in Australia, which is the beta. I'm pretty sure it's the sort of, it's fairly similar to the NDQ indice, and they first started trading the ETF back in May 2015, so not 10 years ago. And you could have bought this particular ETF at $10, and now it's 44. So you would have quadrupled your money in the past 9 years. That's exactly what you want in investment. So ETFs can be a really good thing if you do the right ETFs. So compare that to what's STW. Now, this is just capital gains. It doesn't include dividends. And if you bought the STW at the same time, it has gone up by, 15%. 15% compared to quadrupling. That is the reason why I think you do have to look abroad for investments, particularly if you're focused on ETFs. That's just my opinion. Anyway, I'm not trying to sell ETFs or even the Nasdaq because eventually we will see the Nasdaq pull back. We have seen it consistently through time. If you have a look at the indice here, we've seen a pullback back in late 2018. Of course, during the COVID-19 financial panic, and then we saw the fairly big pullback back when they started raising interest rates. So eventually we will see another pullback. And I think the time to get really excited about not only the Nasdaq, but also companies within the Nasdaq is if we see the Nasdaq pull down towards the longer term moving average channel, which is this shaded green area with this black line in it. I've just changed the color of the 150-week moving average. That's the time to get excited. And right now, that particular black line is below 15,000 and the Nasdaq is about 20,000. So that's what's a 25% drop. That's when I would become more excited than I am right now about the Nasdaq. Buy the dips when it comes to this particular indice. I don't think it's that overvalued, by the way. Some of these companies are not that overvalued based off the growth they are experiencing right now. Whether that growth continues over the next few years, I think there's a good chance they will, but not necessarily an absolute. Russell 2000 is a small cap. Well, actually, they call it small cap 2000 index, but it's the Russell 2000. So I always call this sort of a small cap proxy. So the smallest 2,000 companies in the Russell 3000. The Russell 3000 is the 3,000 biggest companies on the Nasdaq and the New York Stock Exchange. I could be wrong about that. Pretty sure that's right. I'm just going to confirm that. Russell 3000. No, the Russell 2000. Russell 2000 is definitely the smallest 2,000 companies in the Russell 3000. So the Russell 2000 is a small cap US stock market index that makes up the smallest 2,000 stocks in the Russell index. Okay, so let's have a look at the Russell index. So maybe the Russell index is a combination of the New York Stock Exchange and the Nasdaq. Here it is. Weighted stock market that seeks to be a benchmark of the entire US stock market. It measures the performance of the 3,000 largest publicly held companies incorporated in America as measured by total market capitalization. So maybe it includes more than just the Nasdaq and the New York Stock Exchange. There you go. There's also a Russell 1000. I'm assuming that's the biggest 1,000. Highest ranking 1,000 stocks. Yeah, okay. Anyway, so this is sort of a small cap proxy as well. And to be honest with you, if you look at this, it's fairly similar to what we saw when we compared the XJO to the XSO. You definitely want to be in the Nasdaq compared to the Russell 2000. You definitely want to have been in the larger cap companies. That's where it seems like all the growth has been, and that's where I am mostly invested in when it comes to American companies. I do find the American markets to be way more fickle than Australian markets. Weirdly enough, there is a reason behind that. I was trying to find the reason, and I did find a reason. Now, I've never heard of this particular thing before. Pod shops. So someone in one of the podcasts, I can't remember which podcast it was, they mentioned one of the reasons that could explain this volatility, and they didn't explain why it was fickle. They just said sometimes you'll see the share price of a company drop 15% when they release their results, and the results might have missed expectations by 0.0001%, and they explain it through pod shops. And there's a podcast I've yet to listen to. It's from a podcast called Odd Lots. Never heard of it before. How the rise of pod shops is reshaping the way markets trade. Anyway, so pod shops could be explanation why I find the American markets to be really fickle. And I think I talked about this with Adobe. Adobe, when they released their March quarter results, was it March quarter results or the one before? Yeah, whatever. The share price dropped like 15%, and then the most recent results, share price rallied 15%, and there was not much difference in the results. Slight miss in the results, versus a slight beat in results, share price rallied and dropped by 15%, depending on which way it goes. It does give us opportunity to buy these high quality companies at better valuations, and I did that with Facebook or Meta when the share price dropped because they had bad results and the share price has rallied. And I've now seen this quite often. This does give us an opportunity because one of the things this podcast has said about pod shops is they're very short term, and if a company misses their expectations, they automatically sell and move on to the next thing. So it's pod shops. Never heard of it before. I can't even tell you what they do, but they seem to be quite influential. Shall we have a look at the Dow Jones? Yeah, Dow Jones looks pretty good, doesn't it? So industrial average, Dow Jones industrial average. This is 30 companies within the Dow Jones, whatever. So this would include, what does this include? Some of those big companies. So I'm trying to think. Apple, Microsoft. Here it is. Apple, Amazon, Boeing, Caterpillar. I'm going to go through this and see. I've not heard of any of these companies. 3M, American Express, Amgen. I've heard of that. Yeah, Amazon, Apple, Boeing, Caterpillar, Chevron, Cisco, Coca-Cola, Disney, Dow, Goldman Sachs, Home Depot, Honeywell is one I don't know a lot about. IBM, Intel, Johnson & Johnson, JP Morgan Chase, McDonald's, Merck, Microsoft, Nike, Procter & Gamble, Salesforce, Travelers. You don't know much about Travelers Insurance. That's probably why. United Health Group. I do know that. One of the biggest healthcare companies in the world. Verizon, Visa, and Walmart. I'm just going to click on United Healthcare. Wonder if it is the biggest healthcare company. It is the world's 11th largest company by revenue and the largest healthcare company by revenue. There it is. I thought it was, yeah. I've heard of most of these companies. I don't know a couple of these companies well, but yeah, these are pretty big companies, and some of these companies have been around for a while. And yeah, so the Dow Jones, because some of these, there is a bit of an overlap between the Nasdaq and some of these companies. You will see a bit of a similarity between the Dow Jones Industrial Average and the Nasdaq, but the Nasdaq has Nvidia and the Dow Jones does not. That's a big difference. Okay, so let's move on from the American markets to overseas markets. Let's have a look at the Nikkei. Nikkei, oh, look at that. Broke through to record highs in February, has pulled back, and is still in an uptrend. Nice looking indice. Not quite as good as the Nasdaq, but still pretty good. And let's go to the European. So the German, and which is the DAX, and then we'll have a look at the FTSE, which is the English. So German, still looking pretty good. No complaints here. And the FTSE had a few negative weeks there in a row. Was it 4 negative weeks in a row? Back to a positive week. So nice little pullback for the UK. And maybe let's have a look at the Hang Seng. And this is the Hang Seng Stock Connect China 500 Index. Maybe this is not the right Hang Seng Index to look at because it only goes back to 2020. So I probably should look for a new one here. But yeah, it's actually a little bit more positive, but still in a downtrend. Okay, and I think that's probably it when it comes to indices. Let's have a look at commodities. I probably should do this a little bit quicker. I am maybe not rambling. I am in between 2 night shifts, so I am on. I actually did get 3 hours sleep before this video, and 3 hours sleep for me is really good. I don't need a lot of sleep to exist. That's probably not the right word. I don't need a lot of sleep to function. I'm very fortunate, and I'm probably the ideal shift worker who does night shifts because I don't need much sleep to be able to function on those night shifts, except I do need that 1 hour nap during a night shift. If I have a 1 hour nap during a night shift, I can function perfectly between midnight and 7 a.m. And when I say perfectly, I mean perfectly. Typically, I take my nap at midnight, right on midnight. So between midnight and 1 o'clock. And after I wake up from that nap, perfect from 1 a.m. onwards. So I would have been, I'm a perfect shift worker because of that. Don't need as much sleep. I do want to get 7 hours sleep per night otherwise, and after my shift tonight, tomorrow, Monday, I don't have a nap. Most people, after they finish their second night shift, have a nap I don't. I do things during the day. I record a video during the day. And when I actually turn in for the night at about 9 p.m. tomorrow, I'm going to have the best night sleep ever. Then I'll wake up on Tuesday absolutely refreshed. Some shift workers complain that it takes them many days to recover from night shifts. It takes me very little time. And I just think I am lucky that I am a really good shift worker. And I love shift work. I love 12-hour shifts. Love shift work. And I love what I do, by the way. It's one of the reasons why I'm part-time. I don't want to completely give it up because I actually do like the work, which is, I think, is very important. I do prefer this, though, to be honest with you. Although, in saying that, I don't know if I could make this my full-time job. I don't think I would have the same passion, I think, if I was doing this all the time. Anyway, let's have a look at gold. We'll keep on the weekly charts because when you look at the weekly chart for gold, it's still looking pretty good. So one of the things I look at, I am trying to more focus on is the share price or the price of the commodity based off the 150-day or 150-week moving average. So when you look at the weekly chart, we're talking about a long-term trend. And the long-term trend for gold is up. There's no doubt about that, because if we go back 10 years, in fact, if you go back to 2016-18, the trend was nothing. I still remember watching Ausbiz, not Ausbiz, the call, their predecessor, which was Sky something, what was it called? Your Money, Your Call. And this would have been back 2014-15. And the one thing I remember back then is gold companies were either the best performing companies or the worst performing companies. A lot of volatility in gold. And this probably explains it. Gold at that point was in a downtrend, a long-term downtrend. And when something is in a downtrend, there's going to be more volatility. That's the one of the what's the word? That's one of the, not the factors, one of the, there is a word for it. One of the, it's just, sometimes words just don't pop up into your mind. It is one of the, it's going to come up to me in a second. It's one of the, I was going to say conditions. No, it's not condition. It's one of the rules. No, that's not the word. But increased volatility in a downtrend is one of the things you do see. And that's why a lot of gold companies back between about 2013 and 15 or 16 featured heavily in the best performing or worst performing companies on the ASX. And then we saw a nice little consolidation period, which was the end of the downtrend. And since then, we've been in an uptrend. There was a slight period where it looked like maybe the uptrend was coming to an end in 2022. But since then, it's roared significantly higher. It's gone up 50% since then. Anyway, so if we focus on what's been happening the last, say, 2 months, it's been going sideways. A nice little consolidation period. I do have a little price, little support level that if it was to break, it wouldn't be absolutely bearish or negative because we're well above the moving averages, but it will be a little bit more bearish than what I'm seeing right now. But don't fret if you are a gold bug. Just a nice little consolidation period we're going through right now with gold after a beautiful run up from middle of February through to the middle of April. So 2-month period where gold just went nuts. Okay, not quite as bullish when it comes to iron ore. And in fact, if you look at the weekly chart for iron ore, no trend at all. And the reason I say that is if you look at the price, it's been oscillating above and below the 150-week moving average, the black line. And the whole reason I like to have a black line is just to center myself on the trend. And this is telling me there's no long-term trend for iron ore after a huge run back in 2020 through to 2022. Now, you might get a different perspective if you look at the daily chart. And to be honest with you, no, you don't. Even with the daily chart, you see there's no trend. You do see short-term trends, but no longer-term trend. So we saw a breakout with iron ore back in September, and went on a nice run, but that run only lasted September through to January. What's that, 4 months? So not really a long-term trend or even medium-term trend, very much a short-term trend. Let's go back to the weekly chart. Let's have a look at iron ore, not iron ore, uranium. And uranium, it's a nice little, this pullback almost reminds me of the pullback we saw in May of 2022. And we did see uranium go through sort of a flat consolidation period for about May, for almost 9 months. Will we see the same thing here? But definitely has pulled back from its highs we saw back in late last year. No, early this year. And yeah, there is a nice little support level right there. Don't want to see uranium go below $80, and it is in support area, which is the short-term moving average. But if you look at the black line, still in an uptrend, and it broke out. It broke out back in April 2020, just after COVID-19 financial panic. Anyway, that's when it really started to move in an uptrend. Long time ago now. Oil, I am expecting this to be nothing, just flat, going sideways. Nothing much when it comes to oil. Yeah, you can still see here, this is fairly similar to iron ore, but less volatility here. Look at the long-term, well, not the long-term, the 150-week moving average, just going sideways. There's no up or down, and the price of oil is oscillating up and below, above and below that long-term moving average, 150-week moving average. And if you look at the daily chart, the same thing can be said there. It sort of did break out of an uptrend. This was a short-term uptrend and broke below that on the 1st of May. And we have seen a nice little rally in oil, by the way, the last few weeks. It's gone from $73 to $81. So nice little rally, but short-term rally at this point in time. Let's have a look at lithium. I've not found a really good lithium chart I like. So this is lithium futures COMEX. But this is a good indication of what's happening with lithium, and the main thing here is nothing. It's going sideways. I think the drop, the low might have been reached, or it's very close to being reached, and this is probably the time to start thinking about, thinking a little bit more about lithium companies. But we just don't know how long lithium prices will go nowhere. It could be 5 years. We just don't know. And so no reason to get, and I've also noticed quite a few lithium companies' share price have dropped a lot. I was just looking at, say, for instance, Liontown. It's fallen from $1.50 to $1, no, below $1 now. Jeez. Liontown, Pilbara Minerals is weak. Look at that drop. Although Pilbara Minerals is at a nice support level. What else do we have here? Vulcan. Yep, Vulcan. Well, they're all really sucky, their charts. So that's all I'm going to show you when it comes to lithium. Back to the weekly charts. And copper. Oh, copper had a negative day, down 2.63% on Friday. And the weekly chart still looking okay. There seemed to be that really good week we saw back in the 13th of May, up 8.3% for the week, was sort of a blow-off top or something like that. I might not have the correct definition there, but too much exuberance during that week, and then the next week it fell off, and it has been struggling ever since then. Now, it did reach an all-time high the following week after that really good rally, but that would have been the peak. So that would have been, that would have been a long-term high. Is that an all-time high for copper? Yeah, an all-time high for copper during that week, and we have seen a pullback. But the pullback is, all we can say is the pullback might have been needed. Yeah, it might have been needed. Daily chart, still dropping. I don't want to see fall below this level right here. So you can see congestion around that level, just above that level. We saw it back when in the uptrend. So get above this level, pull back, and then start going higher again. And we've set this level again, pull higher, come back, test this level again, try to go higher, but on Friday it pulled back and is right on that very important support level. So it's looking a little bit more bearish than I was thinking a minute ago. Okay, so let's have a look at coal. And coal, I was thinking coal is starting to show signs of breaking out when you look at the daily chart. But that was maybe a few weeks ago. But not quite there just yet. So I have to have a drink, I think. So coal is not quite there yet. I do have my eye on a few coal companies. Yancoal, particular. Like Yancoal looks way better than New Hope. Well, not sure what's happening with New Hope. New Hope's showing nothing, but Yancoal chart actually looks pretty good. And what else do we have? Let's go back to this. And there's a few other ones I do want to show you. What about tin? How's tin looking? This is the interesting one. So tin's not doing much at all. Still an uptrend. I am following one tin company. I think it's Metals X, and that pulled back a fair bit. So there's a little bit more negative sentiment in some tin companies than actually tin itself. Tin, actually, the commodity is not looking that bad. Unlike Palladium, still going down. Oh, Palladium. Nice rally on Friday, up 7.5%. But we have seen rallies before. So we saw a significant rally back in December last year. In fact, on one of those days, it was up 11.5%. But that rally petered out fairly quickly. And look where it petered out. Look where it hit. This is, sometimes you'll see this a lot. The price of something moves into sort of a zone, either the short-term moving average channel or the longer term. And for Palladium, we have seen it move into the long-term moving average channel a few times in the past and pull back. So that's what we saw in December last year. In fact, it hit the 150-day moving average perfectly and then pulled back. And then it hit it again in March, pulled back. Hit it again in April, pulled back. Hit it again in May, pulled back. And it's moving towards that level again. So this is not a breakout or anything like that. It's just a rally in the long-term downtrend for Palladium. And is that all? Good look at gas. What about nickel? Where's nickel? There it is. There's nickel. So gas actually looks okay. Natural gas. E-mini natural gas futures. And yeah, nickel. Let's have a look at nickel. Or we have to have a look at the weekly chart for this one. Or we could have a look at the line chart. Let's go back to this and have a look at the line chart, because I have seen that, yeah, nickel has just collapsed. So what's nickel? Nickel Industries. Nickel, and there's Centurus Metals. It's the only thing I can think of. The only two I can think of right now. Excuse me. I haven't looked at silver, by the way. So this is Nickel Industries. Oh, that's the line chart for Nickel Industries. And you can see, yeah, it's pulled back with nickel. So this is following nickel to a T, really. So let's go back to the candlesticks and silver. Let's have a look at silver. Oh, interesting. Silver had a really good day on Thursday, up 4.3%, and then down 3.9% on Friday. Lost all those gains. But nickel has rallied off the support level perfectly. Beautiful technical signals here. You can see silver rallied to about $29 back in April, then pulled lower, hit the short-term moving average channel, and started going up. Beautiful. This is a perfect definition of uptrend. Exactly what you want to see. And then broke out on the 15th of May, and then it's tested that breakout level a few times a week ago and tried to go higher, but that strength was very short-lived. So that's a very important level. $29 for silver is a very important level. Just, it's fairly obvious to me, just by looking at this, that's $29 is a really important level for this particular commodity. Okay, so let's get to the individual companies that I was talked about earlier, or I named earlier. I didn't talk about them. I just named them, those companies. And we'll start with two companies recommended I look at from a viewer. And I'm pretty sure he actually wrote me 2 comments. So if you wrote 100 comments, more than likely I will see those comments, but all you need is one. I might take a little bit of time to get to them, but yeah. So Lotus Resources. This is interesting. Lotus Resources has pulled back. Okay, so what I am looking at now is I'm just studying charts. Where is the breakout? Where is, this comes back to timing. Can I time my entries a little bit better? Maybe earlier for some time, for some trades, and maybe I was too early for others. And one of those too early entry points I'll talk about later in the video. So for Lotus, I actually did have a look at this. If you go back to here, so this is going back to September of last year, the share price of Lotus was in a downtrend. And we started to see signs of it turning higher here. So somewhere around August, September last year was a good time to enter. But then there was a nice little pullback, pretty big pullback, maybe 30% pullback here. So that could have forced out some traders at that point, and then it went back into a beautiful uptrend. Along the way, we have seen regular pullbacks, but this is by far the biggest pullback, and it's gone below the recent lows or the previous low. That could be a bearish sign. It's now just below the 150-day moving average, and one of the rules I might be implementing is not buying trades when the share price is below the 150-day moving average, and Lotus is at that point right now. Now, what was interesting when I was looking at this particular chart is I just wanted to compare it to the price of uranium, and this is what happened. And this intrigued me. So I'm going to actually increase the size of that uranium. Should I change the color? Maybe I'll make it blue. Here it is. And it's pretty obvious that so most of this period, when uranium started to go on a nice tear, Lotus Resources went on a nice tear. But the peak in uranium did not coincide with the peak in Lotus. There was a bit of a displacement here. So the peak in uranium was back in February, and the peak in Lotus share price was in May. There was like a 3-month delay there, which intrigued me. And the price of Lotus has pulled back, and quite a bit more than the price of uranium. So went back through a few other uranium companies. I went to Palladium. We had the same signal here. Price in Palladium share price was in May, which was displaced, and I don't know why. Then I went to Boss Energy. And yeah, we get the different signal here. The peak in Boss Energy share price coincided perfectly with the peak in uranium. Now, Boss Energy went on a nice little tear back in May when uranium prices showed, or they were hinting at going on a run, but that run fizzled out and Boss Energy share price has just collapsed. So interesting that Palladium and Lotus, there was a displacement between the share price high and the commodity high. Boss Energy perfect chart. And you just see the correlation between the underlying commodity and the share price performance. A few other uranium companies I can think of, DPLO. I actually have not looked at DPLO. What is DPLO's ticker? I thought it was DYE. I could be completely wrong. Deep Yellow. DYL. Okay. And here we have, oh yeah, close. This is almost close. We did see a peak in DPLO's share price back in February, but then the share price of DPLO went on a nice run when we saw that, or those hints of uranium breaking out, and that breakout fizzled. So there is a bit of a correlation here, a little bit better than the other two. And what's another one? BMN. And oh, this one is sort of, yeah. So a little bit more interest in this company as well. So this actually chart looks actually okay, doesn't it? Even though uranium looks a little bit weaker. So a little bit more strength in this company compared to uranium prices. In fact, I could just go to uranium watch list here. Lotus, what else? Berkeley, don't want to look at Peninsula, it's going to be crap. And probably that's all I'm going to look at when it comes to uranium. So let's go back to what company was it? Lotus. And we'll get rid of uranium. Yeah, so it actually does look a little bit weaker right now. The pullback has been quite significant, 49 cents down to 35 cents. So it's a big drop in the price of Lotus. But again, the price of Lotus is going to be highly correlated to the price of uranium. If uranium drops significantly from here, Lotus Resources would drop significantly. It's one of the reasons why I'm not a big fan of mining companies, is because their share price is dictated almost completely, maybe not completely, but almost completely by the underlying commodity. Okay, so that's Lotus. So it looks a little bit more bearish now. Resolute Mining. Let's do the same thing with this. So this is gold, and I do have a gold chart here. I have to do the same thing. It's annoying. Blue, big. So we could just look at how, and I'm just going to, instead of putting gold now, I'm just going to have a look at Resolute. Resolute doesn't look that bad. It's sort of developing an uptrend signal here with high highs. So 2 high highs in a row and a couple of higher lows. And it's just come off the most recent lower low. So Resolute Mining chart looks pretty good. Also broke out here, but share price is right on that level right now. So not a bad looking chart. Probably not my favorite looking gold miner, but let's have a look at the relationship between gold and some of these gold mining companies. And so this goes back to the start of 2023. And obviously most of these companies, because gold has gone higher since the start of 2023, most of these companies I'm going to show you should have gone higher, the share prices. But I don't think all of them have. So let's go to the gold watch list I have. And let's start off with Evolution Mining. So there's a little bit of correlation here, but not really good. There was a big drop in Evolution back in January, and that did affect the correlation a little bit. But you can see Evolution Mining share price dropped significantly back in October last year when gold prices fell quite strongly. Maybe not strongly is the right word. And then share price of Evolution went on a nice rally when gold prices went on a nice rally. So there is a correlation, not a complete correlation, definitely correlation. Let's have a look at Gold Roads. Oh, there is not a correlation here. Something happened with Gold Road back in January. Results may have affected the company. What about Northern Star? I would say there's a pretty good correlation here. Oh, that's almost a perfect correlation. This is almost a perfect correlation. Except recently, there's a little bit of divergence there. Northern Star share price has pulled back a little bit more than gold prices. So maybe an opportunity for Northern Star, particularly those who like Northern Star. Perseus, pretty nice correlation, particularly recently. I reckon this will be the same for Western African Resources as well. Let's go to West African Resources. These Western African mining companies. Yeah, this is a nice correlation as well. What else? What about Remelius? Oh, beautiful, beautiful correlation here. The only time when we did see a correlation was back in October last year. Sort of detached itself from reality here, but came back to reality. But yeah, the last like 4 months, perfect. Resolute, no, Regis. Resolute is next. Regis, no, Regis Resources share price has pulled back a fair bit, hasn't it? And Resolute, which I was talking about, wasn't I? And what else? Oh, SSR, this is going to be a big detachment here because of that mine problem they had in Turkey. So no point there. West Gold, nice correlation. But here's the thing. Oh, Capricorn Metals. I have a feeling there's no correlation here yet. There's been a little bit of a drop in Capricorn Metals share price. Yeah, so there's a little bit of, although share price of Capricorn has rallied recently. And Aurora, I thought this would be the best looking gold mining chart, but it is fairly similar than those Western African mining companies. A nice correlation here between Aurora and the gold price. So particularly from November last year. Now compare that, and I did have a look at one gold exploring company, and there is no relationship. This is Emerson Resources. I'm pretty sure this is gold, and there's a complete detachment here. You can see Emerson share price goes down, gold goes up, and I wonder if this is true for more of the gold exploring companies. So let's have a look at this Rox Resources. Yep, completely the same as Emerson. What else is there? I don't think I've got some of the other gold producers on this list. Let's have a look at Pac Gold. Probably the same. Yep, the same. So you can see the massive difference between gold producers versus gold explorers just by looking at these three, small sample size, these three gold explorers. Anyway, let's go back. Let's go back to the technical video and Resolute. So I don't mind this chart. It may not be the best looking gold companies chart, but definitely not the worst looking one. So that's Resolute. Other than that, don't know much about Resolute, except they're a gold miner. And again, I'm not the biggest fan of gold companies, particularly for the long term. I will be in a trade, a mining company trade, but never own mining companies for the longer term. That's my motto, and that has been my motto for over 10 years now. Okay, next company I want to look at is Ramsay Health. Okay, so the first thing I'm going to focus on is the 150-day moving average. There it is. And I did get a little bit excited about Ramsay Healthcare back in late February when they released the results. Share price on that day rose 7.3%, and I thought this was a breakout. And I took a trading position, and that trading position lasted for about a month before it became obvious that the rally had come to an end. So that rally, when it came to that realization, was early April. So I sold out of that position for a small loss. And yeah, don't ever, this is another really good motto, don't ever be hesitant about taking a small loss because you might be wrong, because that small loss can amplify into a larger loss if you think the share price can rally, and you might sell out at a small gain or at break even. So I just took a loss here, small loss, and the share price has pulled back significantly. So this was a case of me getting in a little bit too early. I got a perfect case for being a little bit too early. And I think even the share price was or did get above the 150-day moving average, the short-term moving average channel didn't quite. And the longer-term moving average channel was still negative, was still red. So there was still a little bit of negativity in there, even though their results were received well by the market. And the other thing to notice here, the share price has bounced off a support level perfectly. This support level, I don't know when I put it in, but this support level has been around for a long time, it looks like. There it is. The lows during COVID-19, the share price share price of Ramsay has just bounced off that almost perfectly, almost to the cent, seems like. My line could be a little bit wrong. And we did see some higher volume coming in there as well. Subtly higher volume, and we've just seen some high volume coming in on Friday's session. But just by looking at this chart right now, Ramsay Healthcare is still in a downtrend. We've just seen a bounce off a support level. And we saw another bounce very close to that support level back in August last year when they would have released their full year results. So this chart, still negative. Kogan, another negative looking chart, but I have this purple box which represents either a resistance zone or a support zone. The reason it was a resistance zone at first is if you go all the way back to 2022, share price of Kogan went into, or was at that point, why would you even be holding shares in this company? And I was at this point. And the share price just kept on falling and falling and falling. There was something good released on the 28th of July, maybe a trading update. Share price on that day rallied 50%. 50%, but that was not a breakout because there was so much negative sentiment in this company. But that did sort of form this purple resistance area. The reason it's resistance is because it pulled out of that area, pulled back into that area about 4 or 5 months later, and really struggled to get above this resistance zone for quite a while. Eventually went above that resistance zone back in June 2023, went on a nice little run. In fact, I was trading Kogan at this point. Yeah, I was in a short-term trade with Kogan. And then that little uptrend, short-term uptrend came to an end, hit it out, and the share price fell back into this zone twice. Actually, 3 times, sorry. Actually, you could even say 4 times. 1, 2, 3, 4. And each time it pulled higher. So this resistance zone had now become a support zone. And then the share price went on a massive tear. I was not trading Kogan at that point. And then share price collapsed. And where is the share price right now? It's in this support zone, right in the middle of it. I did expand this support zone a little bit more as I expanded out. It was a little bit shorter than this, or narrower than this. And yeah, Kogan is right in this support zone right now. The way you could trade this is you could take a position right now at $4.40, whatever the share price is, $4.36. And if the share price falls below the bottom of the range, that would be an easy sell, so a small loss. So the expectation would be here that this support zone would hold firm and the share price will go on a rally from now. So there is support in these levels. And we have seen that support just come into the share price. Share price has gone sideways the last 15 trading days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. When I say sideways, I mean there is a little bit of change, daily change, what do you call it? A little bit of volatility in there, but not a lot. It's really going sideways if you look at the longer term picture. And it's right in the middle of the support zone. Okay, so let's go again. I am not thinking about, actually, that's wrong. I did think about it on Thursday and Friday, but I did not hit the buy trigger. We'll go again. Another negative chart is corporate travel management. Someone did mention corporate travel management and Fletcher Building in the same sentence. I think they mentioned corporate travel management looks similar to Fletcher Building. I thought they meant the company. I was going to reply, corporate travel management and Fletcher Building have nothing in common. Then I had a look at the charts for both companies. So corporate travel management in this chart, Fletcher Building in the next chart. So let's have a look at the two. This is corporate travel management, negative, and Fletcher Building. And I went, oh, okay, I can understand why someone could see fairly similar charts for these two companies. Yes, they both look fairly similar. Now, of course, they're not identical, but they look similar. I do consider corporate travel management to be a quasi high quality company. I would never think the same about Fletcher Building. So there is a bit of a different quality spectrum for both of these companies. And I do think there is a possibility that corporate travel management could be at interesting valuations right now. Probably can't say the same thing about Fletcher Building. So I'd be more interested in, I'd have no interest in buying Fletcher Building right now. No way I would even be thinking about it. But I could imagine someone saying, corporate travel management looks cheap now, and I might take a position. And that could bring support for corporate travel management. Now, it did fall through support level a few weeks ago, maybe even a month ago. And that support level was the lows the company saw back in December 2022. And to be honest with you, there's no trend here. Well, actually, that's wrong. There is definitely a short-term downtrend. There's no doubt about that. But if you look at the weekly chart, I think maybe even the weekly chart, yeah, the weekly chart is showing the possible signs of a longer-term downtrend, just possible. But if you do look at the longer-term picture here, share price really been doing nothing over the past 6 years, really. Share price of this company reached a high back in 2018, 6 years ago. And I do think at that point, the P/E ratio of this company was probably elevated. And the company has grown. I think it's grown. It will have grown, I'd say. Let's have a look at the annual. So the revenue of this company is now greater than it was pre-COVID. Profit's not quite there, but I do think this company is a better place now than it was in 2018. But the share price has done nothing. Anyway, so I am a shareholder of corporate travel management, but this is a longer-term holding. I do think corporate travel management could be thought of as a quasi-high-quality company. Just quasi at this point. I do have some reservations about the company moving forward, but I do think there is also a possibility that the market is overlooking some of the acquisitions the company has made. Now, those acquisitions haven't performed to expectations just yet, but that's just yet. Now, let's go back to Fletcher Building, and this is the weekly chart for Fletcher Building, and this is pretty ugly. And look where the share price is right now. So Fletcher Building has fallen through the COVID-19 lows, and just look at that. So share price dropped right to this level. Let's go to the weekly chart. Share price dropped to these levels in the middle of May, so a month ago, and share price has been oscillating above and below the COVID-19 lows for the last 3 weeks or 4 weeks, and has fallen below it 5 days ago, trading days ago, and maybe this is a permanent below that particular low. So there's no reason, in my opinion, to be owning this company just yet. Yeah. If I do use my rules, 150-day moving average, well, it's an ugly looking chart. But I do, the reason why I'm a little bit hesitant about using that rule, the share price has to be above 150-day moving average, is because I have used a successful trading technique by buying companies bouncing off support levels, fairly strong support levels, and that has worked really well. I've been successful using that strategy maybe 90% of the time. So this was a potential one of those, but probably just as important as initiating trades, using that strategy is pulling back and saying, oh, I don't think this one's going to work. So yeah, I have no desire to even trade Fletcher Building right now. All right, so let's have a look at another one of my too early trades. This is DGL Group. Now, I still own this company because I think this company could be really cheap. And I'm still waiting, really want to see their results. The company issued a really good update. In my opinion, it was a really good update on the 14th of March. Share price on that day rallied about 7% and kept on rallying. But because there's so much negative sentiment in this company, the market's completely forgotten that particular positive trading update. Let's go have a look at it. And the other thing is, other chemical companies in the world are doing much better. So there's not as much negative sentiment in those companies. So in March, was it March? So head office relocation, CFO resignation, and business update. And there was quite a bit of positive sentiment within the business update. So please, I use the word please in the right way here, to advise the company seeing strong rebound activity in the second half of financial year 24 after a slower than expected first half. So, and this is a common theme among other chemical companies. And the share price and the charts for other chemical companies looks completely different than DGL. So this just shows you how important negative sentiment is when it comes to one specific company. So because there's negative sentiment in this company, share price keeps on dropping. People are selling because, oh, share price is going down. I got to get out. I've got to get out. Oh, my portfolio is looking terrible because of DG. I'm going to sell. Got to sell. And the share price is just drifting lower. The market hasn't forgotten that positive update in March. And the market reacted quite well to that positive update. And that's the main reason I'm not selling out of position, just because I'm thinking there could be really good value in this company. Anyway, back to the trade. So I thought, oh, share price is breaking out. This looks like a good trade. But if I'm using my rules, share price was above the 150-day moving average. But the other rule is looking at the short-term moving average and the longer-term moving average. And the longer-term sentiment in this company was still negative. That's the way to look at this. Is the longer-term sentiment in this company was negative. The shorter-term sentiment, which probably I was a part of, I was thinking, oh, share price is breaking out. But those longer-term investors was going, no, not for me yet. No signs of it breaking out. And then they released their results and share price dropped. So even though they released a positive trading update just after the results, it was enough to shift sentiment. I thought the share price could have bounced back up to $1 after the positive update. So I think there is a possible significant upside to this company if they release a positive trading update any moment now. That's what I'm fearing. That's why one of the reasons why I'm not selling is because of that thinking there could be a positive trading update from this company. And if we don't see any trading updates, their results could be much better than the market anticipates because of that positive trading update they released in March. So that's DGL Group, and I did learn from this. I was a little bit too enthusiastic, a little bit too quick to hit the buy trigger, and that's one thing I'm learning now is timing, and this was a little bit too quick. And some of my other trades a little bit too not quick enough. In fact, I'll show you. So let's have a look at my technical portfolio. What's one I was a perfect example was Tours. I mean, the breakout for Tours was probably the most obvious breakout. It was 24th of March, 2023, at a share price of $1.50. It was so obvious. Yeah, here. And that was exactly what I'm looking for. Everything was perfect on that day. And just even if I could have bought 3 weeks later at the exact same price. This is exactly what I'm looking for on a chart. And yeah. And that was the shift in sentiment and shift in trend almost perfectly. And I was so late to the party with that one. Even some other ones here. Orica was another one. Way too late to the party here. So I got to improve the timing. And that's what I am doing now. That's why I am looking at these 3 months highs, so these other screeners on a more daily basis to capture these sort of charts a little bit earlier than what I'm doing right now. So let's go back to the technical update video. And we were looking at a company called eRoad. I have taken position in this company. This is me thinking, getting in there early. Now, few things about this company, not as liquidly traded as I want, but I don't mind that. Some people have said to me, you should be only trading liquid companies. I don't mind trading these companies because I think there's a really good upside potential. And the other reason, and the main reason I bought shares in this company is because of this particular announcement on the 23rd of May, eRoad achieves positive free cash flow in financial year 24. That's one of the most important inflection points for a company. Whether they can maintain that moving forward remains to be seen, but if they can maintain that, this company is starting to look more interesting. And then the chart. The chart looks interesting. Now you can see this company is illiquidly traded just by looking at this one-day candlestick. Share price on a Friday dropped to a low of 81 cents for like 1 minute. I think it was like 1 minute. Let's have a look. Trading. Here it is. So at 11:02 a.m., someone decided to dump their shares on market. So they got share prices of 89.5, 87.5, and 81 cents. Why would you dump your shares on market? It's just dumb. And then 9 seconds later, so share price reached the low for 9 seconds. 9 seconds later, someone bought at 90 cents. That's why you don't dump on market. So not as illiquidly traded as I thought based off this. There was quite a few, 123 trades. Might have been a heavy day. Some good volume coming in, yeah. So anyway, yeah, so if you look at this chart, $1 is very important, and it's a round number, and you can see the share price of this company. And notice the share price rising significantly back in June last year, takeover bid, which failed. But ignoring all that, share price has struggled to get above $1. 18th of December, share price briefly got above $1, then pulled back. And the share price might have briefly, it hit $1 in consecutive days on the 30th and 31st of May and has pulled lower. So what I'm going to do, I do have position in this company, and if the share price breaks above $1, I'll add to my position. That's what I want to do also, is add to my winning positions. And if I see a breakout, this will be a perfect breakout. Above $1, which is a natural support or resistance zone, round number, $1. Almost as strong as 10 cents. Not quite. 10 cents is probably the strongest support or resistance level. In fact, just to prove that, there's a company I've been following called Aurora Labs. And Aurora Labs got to 10 cents. In fact, it got to 10.5 cents, and that's it. A lot of people would have put in their sell bids at about 10 or 10.5 cents. And as soon as it got to that, you see the selling coming in. And over the last 10 years, I've been watching and looking at charts. I've noticed a lot of companies take quite a while to get above 10 cents. It can take them 3 or 4 times for the share price to hit 10 cents, pull back, hit 10 cents, pull back, hit 10 cents, pull back. And then eventually that 10 cents resistance level becomes weaker and weaker. And eventually the share price pulls through. It doesn't always, but sometimes it does. So that's what we're looking at with eRoad and $1. I want to see it get above $1. That would be a nice little breakout. Someone did ask me about VG. Well, in fact, every single company here, someone did ask me about. So me saying someone asked me about Vista Group is unnecessary. This chart looks. This is another illiquidly traded company, probably more than eRoad, both New Zealand based. So let's have a look at Vista Group. I'm just going to have a look at the trade history. Yeah, so 28 trades, so a little bit more than maybe. So a little bit more. So volume was, yeah. So this isn't that illiquid. Not as liquid as I thought it was. This is a beautiful chart showing you the transition from negative sentiment and a downtrend to positive sentiment and an uptrend. A beautiful, and I was trading this for a while, but it was too illiquid at the time. And yeah, and then I changed my mind about not trading illiquid companies because of Vista Group. I bought some shares in this company as a trade, and then I thought, oh no, I shouldn't. It's too illiquidly traded. Then I sold out of that, and I sold out here, somewhere here, and yeah, share price has gone on a massive tear since then. So I just got to leave that bias against illiquidly traded companies, and it's not a personal bias, it's other people's biases. So I was listening to other people saying, you should not be trading illiquid companies. And this is the reason why you can. Share price, and everything's just turned from negative to positive within the last year. And it has taken a while for that sentiment. You can see a bit of volatility in there, and this is a perfect uptrend chart. Beautiful uptrend chart. We've also seen some increase in volume as well. Seen some spikes in volume. So someone's getting interested. I'm not sure why the share price spiked up on the 27th of May, up 17.6%. DGL. What was the date? 27th of March. 27th of May. 2 months off. 27th of May. Oh, someone bought some shares in the company, it looks like. Change in substantial holding. What's happened here? Someone sold some shares. No idea what's happened there. They've also released a presentation recently. So look at that presentation. AI in action. This is a cinema software company. And funny enough, I think that cinemas are in secular decline. So possibly this is not the type of company you want to be investing in. So have a look at that presentation. So this is not about the long-term future of the company. It's just a chart. Anyway, that's something to keep in mind. Synlait milk. Someone mentioned, oh, again, I don't have to say that. Synlait milk. And the first thing I think of when I look at this chart is Kneppy. In fact, I was going to do that, wasn't I? For these charts. This is an absolute Kneppy. Absolute Kneppy. No. Yeah, I don't think. I said at the beginning of this video, there's always something positive to see when looking at charts. Is there anything positive about this chart? Maybe volume, maybe has increased the last few months, maybe. There is nothing positive about this chart. And I was once a shareholder of this company when the share price was in an uptrend here. But just because the share price is an uptrend doesn't mean it's a long-term hold. I'm not one of those people who have to hold a company for a long term, unlike Scott Phillips, who has to, when he buys a company, owns that company forever. I am not like that. It's not the best way to make money, in my opinion. Some companies, yeah, but yeah, you can make a lot of money not owning companies for the long term. So yeah, what else is there to say about this company? So back here, so let's zoom in. Let's go back in time to late 2022. So share price of this company went on a nice little tear in late November, early December of that year. So this was a potential breakout, which fizzled out fairly quickly. It fizzled out fairly quickly. And I'd say not a lot of, there's a little bit of volume coming in, but the volume massively increased back in March, April of that next year, 2023. And yeah, that was the total shift in sentiment. So you could say here the sentiment was sort of neutral, maybe trending towards positive, and looks like the market knew something was bad was going to happen to this company because the share price started to move into a downtrend just before the bad news. And yeah, just no. For me, no. Woodside. The person asked me about what's wrong with Woodside share price. Why does it keep on dropping? Negative sentiment. You would think the share price of Woodside would track well to oil. Let's have a look. Oil. Futures. Oh, this is taking a while. Which one? Crude. I don't even know. I'm not even sure which one I use. Let's have a look at this. Nothing came up. Anyway, so yeah. At this point in time, why? You can see there was a support level at around about $29, and you can see it bounced off it twice, and then it broke down below that support level on the 22nd of April, and you can see, if you just extend that a little bit across, share price rallied and tried to test that level, but failed, and the share price has just been meandering down ever since. Some big volume coming on Friday, although I've seen that for a few companies, some big volume coming in, so there could be a reason behind that. But the chart looks so negative. It looks negative. This is the daily chart. Weekly chart would look negative as well. And we do have maybe some support zones around these levels. Yeah, I could say that. There is a support zone right there. And that's the highs we saw, or Woodside saw back in early 2021. And the share price is, if you look at the weekly chart, sort of going along that line. Yeah, it did bounce off that, didn't it? And now is testing that level. So I have no interest in Woodside. And yeah, okay. I'm going to talk about Deterra last. Now let's have a look at Monash. Now, someone did ask me more about Monash, my opinion about Monash I think it was more directed not around the chart, but more about the company. And then I wasn't going to include Monash in this video, but then I had a look at the chart and went, okay, there are some things to talk about when it comes to Monash IVF. And then we'll talk about Deterra in a second, because there was a few questions about Deterra, particularly why I bought Deterra, which I think is important to answer. Now, Monash is really interesting, and this company did pop up to my radar over a year ago. Yeah, early March 2023. This is another example of a beautiful shift in sentiment and a trend in share price. Actually, it happened twice. Yeah, no, it came onto my radar here. So long-term downtrend started to move into an uptrend. In fact, I think, yeah, the downtrend started well beyond this. In fact, you can see a long-term down. This is let's have a look at the weekly chart. You'll be able to see it in the weekly chart better. Whoops. So this company moved into a downtrend back in 2016-17. So not long after it listed, and this downtrend lasted for a while. And then the company share price moved into an uptrend back in early 2021, I think. And you can see that by the daily chart. There it is, beautiful uptrend. This is when it hit my radar. But I've never traded this company, even though this chart looked really good. Downtrend came to an end in June 2022. So you could have been holding shares in this company for over a year and you would have made about 30, 40%, which is okay. And then not much trend here, and then it moved back into an uptrend back in March 2023. And that uptrend has been pretty good. It's been a nice uptrend. Now, I put this purple box as indication of Monash IVF was trading in a range, or had a potential to trade in a longer term range. So the bottom of the range was pretty obvious, because you can see when the share price of Monash fell to the bottom of this range, which was about $1.40, it bounced. It hit it a lot. And the top of the range was fairly obvious as well, because share price, when it got to about $1.52, it fell. So not a very tight range between $1.40 and $1.52. So what you would do with this sort of trading range is wait for a breakout above or below. And unfortunately for holders, the share price broke out below the bottom of the range on the 4th of June. So not long ago, 3 weeks ago. And yeah, it stayed below that ever since. Fair bit of weakness in it. Now, we did see a bit of buying coming on the 11th of June. Not a lot of volume, but when the share price dropped to $1.26, we saw some buying coming in. So probably the best way to say it, when the share price dropped below $1.30, we did see some buying coming in. But definitely Monash IVF Group's chart looks much weaker than it did not that long ago. So the other thing to notice here is share price is now below the 150-day moving average. The short-term moving average channel is starting to go red. So it's in a short-term downtrend, but the longer-term moving average channel is still green. So maybe the longer-term investors are seeing Monash IVF, seeing the pullback of the share price, and are becoming interested. Maybe that's why I've received a few comments in regards to this company, because of the share price declining. Yeah, so that's Monash, just a little bit weaker chart for the company, much weaker than it was. Now, Deterra. I was thinking of maybe doing this very short standalone video on Deterra, why I bought some shares. In fact, I'm going to do that. I'm going to do a short why I bought Deterra royalty shares later, because this video has gone on long enough. Yeah, so there is technical reasons why I bought some Deterra royalty shares. And some of the other questions I've received around this company has to do with the dividend policy. And I do have some comments in regards to that, particularly when it comes to 50%. People believing, oh, the dividend payout ratio has gone down to 50%. It's not quite true if you look at their wording. Anyway, I'll discuss that when I do a standalone video on Deterra royalties and why I bought some shares in this company. Anyway, that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.